What's up, everybody? And happy Flip and Hold Funding Friday, Accounting 101 edition. Not all accountants are created equal. Last time, we spoke about attorneys and how important they are for our business. And this time, it's the accountant's turn. It is common knowledge there are great tax advantages to investing in real estate. And albeit true, that just begins to scratch the surface of what an important member of your real estate team, an accountant, really is. My accountant and I are constantly discussing topics limited, such as, but not limited to, the following. First of all, write-offs, right? What can and can't you legally write off? Cars, boats, gifts, meals and entertainment, etc. How many people just tell you, just write it off and have no idea what they're talking about? Let's talk about depreciation. This is a wonderful thing, but do I really know how it works? What happens when an asset is fully depreciated? How do I correctly depreciate an asset? These are things we need to have an accountant for. Let's talk about cost segregation. Has anyone heard that name before? Right? That's the ability for a real estate investor to accelerate the depreciation, thus reducing the federal and state tax income payments, in some cases significantly. But it's not simple, right? How about capital expense versus repair and maintenance? How can I account for each of these, and how does each affect my tax liability? What about cash versus accrual accounting? These methods differ in several ways, including how income and expenses are reporting on a tax return. But by selecting the correct one, you could see significant tax savings. Let's talk about a big one now: entity structure and deal structure. How do I structure my real estate business? How do I structure a deal? Should I be buying properties in LLCs, S Corps, INCs, trusts, my personal name, or something else, right? Also, if I have a lending company, should I create a traditional fund, have a fund structure where I charge a management fee, or should I use a simpler structure such as a promissory note? Listen, a good accountant is constantly monitoring changes to the real estate tax code. Tax codes are constantly changing, and guess what, people? The IRS is not hiring more agents so that they can give you more money. Quite the opposite. So you need to have a professional accountant on your team constantly evaluating your business. What about capital gains, short-term versus long-term? What's the difference, and how does it affect my real estate business? How about this one? Everyone loves talking about 1031s. 1031 like-kind exchange. This allows you to postpone paying tax on a gain if you reinvest the proceeds in something similar. But remember, tax deferred and tax free are very different. So you need to have someone in your corner that helps you know what you're doing and helps you identify proper 1031 exchanges so that you can actually take advantage of that, right? Let's talk about tax returns. Probably one of the most biggest and most important things that we have and we need to prepare are our tax returns, our financial reporting, our P&Ls, our balance sheets, our income statements, our financial statements, right? Are they audited versus management prepared, etc.? Anyone that wants to scale into a large real estate investment, development, or lending business knows or needs to know that they need to have tight financials with regards to not only your personal tax returns, your business tax returns, and some kind of financial reporting, depending on what kind of real estate investing you're involved with and to what level you're trying to get in. So this only begins to scratch the surface on what a good accountant can do for your real estate business. We'll go into much more depth on our next round of education videos, but for now, the big takeaway is reach out to me if you don't have one. We can refer some to you, but get one in the mix with all the other people working for you. And remember, most importantly, for all of your fix and flip and fix and hold needs, whether a condo, single family, multifamily, and or new construction, 600 or 6,000 square feet, you call us first. We have rates as low as 10% in 1 point, as little as 0 to 10% down, as well as no payments for the first 3 months. You heard it right. We are flip and hold funding, hard money, made easy. Have a good day, everyone.